All right, guys, in this video on how to trade the E-mini futures, okay, I am going to show you how to transform this candlestick, what I call nonsense chart, into this clean chart on the E-mini futures. And I'm also going to show you how a simple trend line can nail the starting point of big moves in the market. All right, let's do it. What's up, guys? It's Mark here at DinoTrading.com, the world's #1 resource on learning how to trade price action techniques. We don't mess with indicators. We don't mess with candlesticks. You hear me say this many times on my channel and on my videos. Please stop screwing around with indicators and candlesticks. There's all sorts of turds on YouTube who are showing off their fancy Bollinger Band copycat or their MACD or moving average. I don't know how you can put together a coherent and competent strategy with indicators and candlesticks. All right, so before we kick off this video on E-mini futures, the first thing we have to do is we have to transform the chart. All right, so with one click of your mouse, guys, I'm going to show you how to turn this chart right here into this chart right over here. Okay, so guys, I think it's pretty obvious the difference in the chart styles. For me, I've always found that to be a massive difference when I do my technical analysis. I personally think that when you're able to read what's happening to the exact tick, all right, on the charts, that allows you and it enables you to make better trading decisions, right? It's not a guarantee that you're going to make millions of dollars by next Tuesday, okay? But I don't think there's anybody that can dispute that there's a massive difference between the chart that most people are using, all right, which is this candlestick garbage, and these indicators, whatever the heck they are. You know, this is used by 95% of traders out there, and they're all wondering why they don't make any money or why they can't figure out the direction of the market, right? So there's a night and day difference between garbage charts, what I call unprofessional charts, and professional charts, okay? But you've heard me say this before, just because you have a clean price action type chart, okay, doesn't necessarily mean that you're going to be able to properly do your technical analysis, right? When you're trading the E-mini futures, which is a really incredible asset class to focus on. And by the way, guys, this is the E-mini NASDAQ, all right? This is just absolutely one of my favorites for no other reason other than this thing moves like a beast. I know there's a lot of guys out there who love the S&P 500 E-minis or the Dow E-minis. I just love the NASDAQ future E-minis. Again, I just feel that it's very conducive to my personality and my style. You may or may not agree with that, but the technique and the patterns I'm going to show you right now are going to work on all the E-mini futures, okay? So once you have an appropriate price action chart on your computer and you're studying the market, you're analyzing the market, you're looking for low risk setups, how does that actually take place, right? What does that look like? Well, for those of you that are new to the channel, I'm going to show you a really fascinating pivot point technique. You know, again, I'm not the inventor of pivot points. I'm not the inventor of trend lines. But what I have been able to do is look at the market from a purely technical perspective, all right, and identify pivot points and then connect those pivot points with a straight line. So let's start with part one of that equation. Let's identify the pivot points, guys, all right? Watch me do that. A pivot point is simply any area on the chart like this where prices come up a little bit and then get beaten back down. They came up a little bit and then get beaten back down, all right? These areas, which I've drawn here on the chart as blue dots, okay, these are statistically significant areas in the charts. If you're not paying attention to pivot points, guys, just trust me, you are really, really doing yourself a disservice, okay? But once you've identified the pivot points, well, what comes next? Okay, well, this is really easy. All you have to do is look for a sequence of two falling dots, draw them with a straight line, okay? And boom, that becomes your trend line. right? Nothing special about this, nothing extraordinary about this. You don't have to be a math genius to be able to do what I just did here on your chart. In fact, I'd be shocked if it took you more than a couple of seconds to identify this pattern. All right. So today was actually a really interesting case study because traditionally, all right, traditionally on a trend line, at least when I draw my trend lines, I'm only waiting for 2 dots. If you actually look at these sequence of pivot points, what do you notice, right? What you'll notice is that if I draw a trend line like this, okay, isn't that interesting how all 4 of these pivot points appear to be pretty much on top of the same trend line, right? It's mostly fine if you just get 2 dots, right, which is this one and this one, which is actually the final trend line of the day. But if you eyeball this, you can actually see that there were 4 separate times where the price came up, beaten back, came up, beaten back, came up, beaten back, 4 times. Right? So what that should tell you guys, all right? This gets into the meat and potatoes of what I'm trying to show you here, okay? When it comes to price action, this is legitimately price action techniques. This trend line must be respected until it breaks. And where does it break? Well, it breaks right over here in this sequence of price bars, right? So that alone should tell you something, okay? Imagine all of those morons who tried to short the market. They've been trying to short the NASDAQ for a long time. They've been trying to short the S&P and the Dow and all sorts of future symbols. They've gone nowhere, right? This type of setup tells you not to be short, right? You should be a buyer. This is a trend line that got broken pretty violently to the upside, and what it's telling you is that the buyers are in control, right? Shame on you if you stuck with your short after it so clearly and obviously broke the trend line. Okay, so anyway, what comes next? What comes next in this sequence of analyzing price action, looking at these E-mini futures, and trying to put together a good trading plan for what comes next? Okay, so a couple of things just happened. The trend line was drawn, the trend line got broken, and now you're deciding, do I want to take this trade? Yes or no? If I take it, where do I place my stop? Right? And by the way, guys, good luck trying to figure it out on this nonsense here. I don't even know how a person could figure out a logical and sensible place to put your stop on this nonsense chart, right? What I like about my price action type charts, and by the way, the name of this chart style is called TBars, guys, just so you know, you can actually see the name of the chart in the top here. What I personally love, maybe even more than any other aspects of these proprietary T-bars, is the ability of the chart to show me exactly, without any subjectivity, where to place my stop. Okay, so let me show you how that's indicated here on this chart. If you decide to potentially take an entry to the long side here, okay, so if you feel that, you know what, it broke the trend line, I potentially want to be a buyer here, all right, if you've made that decision, you absolutely 100% need to have a protective stop loss. Where does that go? Well, that's real simple here on the T-bar charts, right? Anytime there's a potential entry, you simply glance to the left on your E-mini futures chart and you look for the most recent swing low, which is this bar right over here. Okay, I've put an arrow right on top of that bar. That's the swing low, okay? And so a logical place, all right, to put your stop is 1 tick below the swing low. Make sense? Again, guys, nothing too complicated about this. This is a simple trend line trading strategy on the E-mini futures that, I mean, I think anybody could master this, all right? And essentially, guys, what you're hoping for is you're hoping that this thing moves at least a couple of bars, maybe, you know, over here or maybe over here, enough to get to break even. Makes sense? Because you don't know if this market's going to rip like it did today, or it may go up a few bars and then come right back down. Nobody knows, right? So this game, guys, of trading the E-mini futures, really any asset class, any market, Forex, futures, stocks, options, I am a firm believer in getting to break even. Whether you make money that day, whether you don't make money that day, that should not be your concern, okay? What should be your concern is managing your risk, making sure you don't get killed on any one particular trade, and of course, finding a way to get to break even. The best analogy I can think of, guys, all right, you're really going to see what I'm talking about here is, imagine you're trading penny stocks, okay? I don't know if you are or not, but say you buy the stock at $5, right? And next day you see it trading at 10, okay? And you're thinking it might go to 100, okay? But if it's at 10 and you bought it at 5, then at least sell half your position at 10, right? Because what if it goes to 0, right? That's the same analogy, guys, on putting together a break-even concept. The idea here is to take all of the risk, or hopefully all of the risk, off the trade and let the market do whatever it was destined to do that day. Today, it was a massive rip to the upside, setting another record today, all-time high, on the E-mini futures. But again, we don't know that as we're taking the trade. We have to prepare for the trade not to work out in our favor. That's what good traders do. So to wrap this video up, guys, really simple price action trading techniques, I think is going to be, your winning ticket on at least finding a coherent, competent strategy. All right. Whether you make money is secondary, right? You need to focus on managing your risk. Okay. The best traders in the world are excellent risk managers. The worst traders in the world don't even know how to spell risk. Okay. They're too busy looking at garbage like this, screwing around with their indicators, finding this latest, greatest indicator that happens to be for free, right? You ever heard the saying, you get what you pay for, right? Well, that's what free stuff gets you, right? When you decide to embrace a price action clean display using nothing more, guys, than a simple trend line, all right? I can almost guarantee you that you'll be able to teach yourself a very valuable skill, all right? Being able to read price action is valuable. Just trust me on that, okay? And not everybody knows how to do it, number one. And number two, not everybody's good at it, okay? So being able to teach yourself how to read price action, how to simply draw trend lines. And by the way, my automated trend line drawing tool, okay, which is right here, all you have to do is slap this onto the chart. As you can see here, it clearly says automated trend line longs, right? All you have to do is slap it onto the chart, and that program will do all of the heavy lifting for you, drawing pivot points, drawing trend lines automatically. But even if you didn't use it, you can kind of see how price action trading on the E-mini futures is far superior to any other strategy you've probably looked at in your entire life. All right? That'll do it for this video, guys. Hope you learned something fascinating and informative. Hope I've been able to show you that a simple chart style and a simple clean trend line makes all the difference in the world. If you'd like to know more, feel free to get in touch. Description in the link below. Thanks for watching this video, and I will see you on the next trade.